It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Monday evening, March 7th, 2016. Cracking open a brand new week, the second full week of this month of March. Hope you guys had a great weekend out there, by the way. We're back here for another big week of learning and earning opportunities on our newsletter, in our live trade room, of course, as well. Just a heads up, tonight in the newsletter, we have kind of a shortened version of our newsletter. I had some technology snafus here in the office this afternoon, pushing my timeline back a little bit further than I want it to be. So tonight we're going to cover crude, we'll cover the S&P, and unfortunately only gold. I'm not going to have time to cover the euro. Obviously, come join me tomorrow morning in our live stream as a member. We'll cover all these markets for you. So I apologize. It's going to be an abbreviated newsletter for you guys and gals tonight. Unfortunately, not going to have time to cover all four markets. We'll cover three: crude, S&P, and of course, gold. Got a lot to talk about tonight. Buckle those seatbelts. Kicking off here with crude oil. The oil market is bullish this evening, just a little bit bullish. We have a pending measured move on oil right now, left untested. So we expect the bulls to try once more to send this price higher tomorrow. 3 pushes up, though, today in the cycle on crude. We got a good chart and plan for you guys if you're trading oil tomorrow. The E-mini S&P is range-bound. We get a bull bias this evening for the S&P as the buyers try to retest the highs in today's session. But there is a key resistance level in our way, and we're stuck around that 1,200 big round number holding us back. We got a couple different scenarios to consider for the S&P tomorrow. We'll go over all 3 of them here in just a moment. And of course, the gold. The yellow metal is trading sideways ahead of the highly anticipated ECB meeting this evening, or EC meeting later on this week. We get a triangle on the chart right now on gold that tells us to buy low, sell high, and focus on failures until we find a direction tomorrow. A very important chart to be looking at on gold. And hopefully this gold market doesn't sit like this the rest of the week here. We get that ECB meeting on Thursday, and that's going to be keeping gold and the euro, of course, real consolidated. Before we get into charts, though, tonight, I do want to remind you the only place to watch the full-length version of this video newsletter is on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel right now, there's a link in the description of the YouTube video. On our YouTube channel, it's only the first market and a half. It's only the first 10-15 minutes of this video. So if you want the whole version, follow that link. Come join me here at sidewaysmarkets.com. And while you're here, don't forget to grab your free pass to come out and test drive our live trade room as a guest. Join the trade room as a guest. Grab your free pass in the upper left-hand corner. In the lower left-hand corner, make sure you register for our nightly newsletter mailing list. That way you'll get an email from me every evening when the newsletter is ready to be watched. That way you'll never have to miss the full-length version of our newsletter. Also, right below the video tonight on our blog, you can download all the charts you see me using in tonight's video. Follow that link below the video and download today's charts so you have them ready for tomorrow. Over on the right-hand side, I'll encourage you to learn more about our trading strategies here at School of Trade by joining our free trial membership. Learn more about what it means to be a member. And remember, guys, we always have someone standing by 24/7, 365 to answer all your questions. No question too big or too small, right? Grab your live support on the right side of our trading blog. You ready to rock and roll? Again, a relatively abbreviated newsletter for you guys and gals tonight. Let's start out talking about tomorrow's calendar. Now, we have a highly anticipated ECB announcement, right? It's going to be about, 7:45, 8:15 a.m. on Thursday morning. So heads up on that, right? We'll talk more about that as we go. But that's going to be on the headlines, right? They're talking about increasing the quantitative easing, right? They're going to be throwing the kitchen sink at this situation, right? Low inflation, right, sluggish growth in the ECB. We'll talk more about that right on Wednesday night, but that's going to be the reason why gold and euro and any other currency-based markets are going to be a little bit sluggish here going into that Thursday session. Tomorrow, though, Tuesday, March 8th, we have another day without any major news. Now today, Monday, March 7th, right, this was the reaction Monday, right? We don't expect to get any news after Friday's non-farm payrolls. If you were wondering why there wasn't any news tonight, it's because today was Reaction Monday. Last Friday's non-farm payroll and that huge explosive number that we saw, wasn't that a great day last Friday? I hope you guys made some money off that stuff we talked about in Thursday night's newsletter. It was relatively easy pickings on Friday morning, and hopefully you guys will make a buck off it. But again, Monday today was Reaction Monday, the Monday after non-farm payrolls. There's another Monday we like to watch out for for, and that is rebalancing Monday, and that is the Monday after quadruple witching, which will be getting not next Monday, but in 2 Mondays from now, the 21st. We'll talk about that as we go. And guys, keep in mind, in my beginner's course, there's a chapter in the beginner section of our website that talks about the trading calendar. And we talk about non-farms and reaction Monday, quadruple witching, and rebalancing Monday, right? We talk about all these important dates, just in case you're wondering where you can learn more about that, right? Our beginner's course. Now, tomorrow, again, no major news tomorrow, right? It's the second week of the month, and this will be the second day tomorrow, where ultimately it's going to be headlines coming out of OPEC, headlines coming out of the ECB, and of course, we might just hear a few politicians, right, grab the spotlight tomorrow as well as they prepare for that big event, right, later on this week. So no major news on the calendar for tomorrow. That means we're going to be keeping our eyes and ears open, really listening in for unexpected political announcements, natural disasters, acts of terrorism. I'm sure OPEC will try to find a way to squeeze into tomorrow's session as well. So don't forget, we're always listening to that stuff live in real time in our trade room. Come out and join me tomorrow morning at 8 a.m. Eastern time. Let's shove off here this afternoon. Let's talk about crude. Then we'll go to the S&P and we'll wrap it up with gold. And again, tomorrow night, I'll make it up to you guys, right? And we'll bring in the euro like we always do. First of all, crude oil is bullish this evening. And with the pending measured move still left untested, we expect the bulls to try once more before they send this price higher tomorrow. We have a bull channel. We have 3 legs higher, and we have a few different measured moves to work with this evening. Let's dig in. First of all, the bull channel tells us to look for buying opportunities at the lows and keep an eye out for the bears using the low as resistance ahead of a possible reversal lower. Here's my bull channel. And what do we know about a bull channel, right? The bull channel tells us buy the low, right? Buy the low, take your profit at the high. Buy the low, take your profit at the high. What else does a bull channel tell us to do? Well, it also tells us that if we happen to slip below the low like we are right now, watch out, because if they use this as resistance, that's going to be the first shoe to drop, right, before we make a run at these areas of support, right? And you can see as of right now, we are right there, right? We are right there, right at the low of that channel. I do still think they're going to give it one more try here, but if they happen to reverse this thing now and we go lower, we know that they definitely have tried, right, to run it higher, and unfortunately the underbelly of that bull channel is acting as resistance. I don't think it's going to slow this market down here too badly, but that might be the case here, at least in the short term. Okay, we know a bull channel tells us buy the low, take your profit up at the high. It also tells us be watching for it, especially if we get a scenario where we push higher, right, into that measured move, and then that's where you're really going to want to be looking for it to acting as resistance. That's where you really want to be paying attention to it, right? If we do finish the job up there, use the underbelly of that channel, right, as an easy area of resistance, and really more as a proof, right? It's more of a proof mechanism than anything else. If we see it start to sell off here after that, right, then we know they use that underbelly of that channel. Let's keep going. Next up here, 3 legs higher tells us this market is considered expensive, and smart buyers will be looking for a 2-legged correction off the highs to buy this at a cheaper price. Count them up. 1, 2, and 3. Now, this does not happen very often. The 3 legs higher did not complete the measured move, right? You can see the measured move. It's pretty easy to define, right? So that measured move is still hanging out there at 38.27. Here's the deal. 1 leg up, that's the market makers. 2 legs up, those are the trend followers, right? Exactly what we did today in the trade room. And then, of course, the 3rd leg up, these are the market, right? These are the late adopters, right? The sloppy seconds. 3 legs up tells a smart buyer here right now, this is too expensive, whether or not we've achieved the measured move or not. Usually what happens is when you see 3 significant pushes higher, it's very obvious to see that. Usually what happens is that the buyers are going to wait for price to pull back, right? They're going to look for a 2-legged correction. 1 leg, 2 leg, before they try to finish off that measured move. Keep in mind, the only way we'll adjust that measured move at 38.27 is if we came all the way back, right around that 36.88. So that measured move is going to be there unless, of course, we make a new C point, right, which is very unlikely, at least, to get that measured move hit. So again, 3 legs up tells us this market's expensive. And how do you attract more buyers? Lower prices. Look for a 2-legged correction. Usually it's going to trap in, right, some of those sellers below these lows. Look for a test below 37.53, 37.46, right, for the chance now to be a buyer into those stop losses of those sellers. Remember, whenever we have a correction off the highs like this, the first opportunity is going to be look for sellers to try to sell that next pullback, right? They're trying to sell retracements. Look for them to fail, buy into their failure, and then buy those dips, right? Wave patterns, pullback patterns, continuation patterns up to that measured move. Now, that takes us into our third piece of this puzzle. The measured move will be used as targets for the buyers, and they may need to be adjusted if we do get a correction back. Okay? Follow the bouncing ball here. A to B, B to C, C to D. This measured move is not likely to have to be recorrected, right? It's gonna take a really deep pullback. It'll have to correct below this 36.88 if that major measured move is going to be in play. The other measured moves, though, are definitely still up in the air right now, if you will. 1 move, 2 moves, but that short-term measured move, right, which I'm measuring off of this one, that may pull back a little bit lower, so that may come down a little bit, right? So this one here, what I'm going to call kind of a medium-term measured move. And the reason why I'm drawing it like that is because you can see there was a prior bull channel here. You're looking at it in terms of a third leg up, right? It's a measured move up to a third leg up. So if we do trap low, then we know that this one's going to be brought down, right? That'll be brought down, and that measured move will actually be right about here, right? Again, it all depends on if we correct lower here in the overnight session before we go higher. Then you have the final one, which is the triple measured move. A to B, right? B to C. That's going to be a triple measured move. Triple measured moves are going to be calculated off of the lowest point of that pullback. But again, if we do correct lower, if we do get a 2-legged correction, right, then all of a sudden that triple measured move gets much more closer to where that 38.74 area is. So really the only measured move that we're kind of bulletproof with, I don't want to say the word, maybe not bulletproof, but the only measured move that is almost guaranteed is that 38.27 unless we pull back right below that 36.88 and then go higher. But then obviously you'll have a much bigger, right, measured move to worry about at that point. Okay, as you can see, the market is definitely bullish at this time right now, right? We're looking for a retest of that high. To finish off the conversation here about oil, though, when we finish off that measured move, don't forget, measured moves oftentimes like to double top, right? So we're always expecting that measured move to be completed, little pullback, the residual buyers, the late adopters will come in, they'll try to run this thing higher, expect it to make, right, a higher high here. It shouldn't go that much further because that's where sellers will be waiting here, right, above that measured move. Again, look for a double top into that measured move. This is going to be your first chance, right, to be a relatively aggressive seller off that high, right? Remember, we talked about this last week. When you go into a measured move, if it gives you that double top, look for a nice, juicy red signal candle, right? Make sure you get the proper signal on it. It's going to require a little bit wider stop, but your reward is well worth it because it'll be gunning for, right, that next area of support. If you don't want to sell into that double top, right, which again, it is aggressive, then you're looking for those selling opportunities using your continuation patterns, right, as we come back in. Remember, when we know the sellers have control is when they hold the pullback to that moving average. So we go up, make the measured move, pull back, try it again, look for a new higher high, double top of the measured move. That's going to be your first chance now to be a seller. Then what you want to do is to really be safe, look for the sellers to hold that pullback, right? And then you're going to know the sellers have taken back control, and then we'll be looking for a larger channel, another measured move right on the way down. If price goes higher on crude, we're looking for that measured move, double top, right? Sell it and then wait for the sellers to take control by holding the pullback. If it goes lower, we're looking for traps with seller failure to buy it up, right? Traps with seller failure to buy it up, right? And again, I mean, we definitely could get this price to pull all the way back here into this 37 area before we get some relief. Look for a short-term correction lower.